Hello and welcome to the Mutual Fund Show. I'm Neeraj Shah, and over the next 20 minutes, we'll talk about obviously mutual funds, but talk about CRISIL's rankings, the latest rankings that they put out in the month of December. We're doing it slightly late, obviously because of the whole earnings season and the budget pieces. But it's always lovely to get in Piyush Gupta to try and talk about some of the funds and some of the categories and why funds have gotten the rankings either changed or maintained from what they would have done the previous quarter or the quarter before that. Piyush, good having you as always. Thanks for joining us on the show today.
Thank you, Neeraj.
So, Piyush, we've chosen 5 key categories, and on the equity side, small cap funds clearly become a key component because a lot of people want to know what to do there. We've also chosen value and contra funds, value or contra funds as the case may be, because a lot of recommendations coming for those. ELSS becomes a natural category since we are approaching March, and therefore we thought that was pertinent. And on the debt side or other non-pure play equity side, conservative hybrid funds and banking and PSU funds. So I think these are the 5 that we have chosen per se. And I will start off with the small cap funds because people are getting advised that, hey, be very selective in small caps. If anything, get out of small caps, stick to large caps. And therefore, people must be wondering that if I want to stay in small cap funds, let me be with the best. And therefore, we thought it's best to kind of try and understand why is it that some of the funds have received the ranking that they have. So on the small cap category, I'm going to start off with the quant small cap fund, which kind of maintains its position. What is happening out there?
Yeah, so quant small cap, in fact, is one of the most consistent fund as far as this category is concerned. This fund has got ranked 1 in all the last 4 quarters that we have published. So if you look at this particular fund, it's slightly different from the other funds, which in terms of portfolio construction. So one of the key things that stands out for this particular fund is it's a fund which maintains a concentrated portfolio and a significantly high amount of churn that we see in this portfolio, which means that the fund buys stocks for a shorter period of time, books profit and exits. This also gets reflected when we look at the number of stocks that the fund has taken exposure to. So more than 250 stocks the fund has taken exposure in the last 3 years. When you compare this with, say, other funds within the category, it's about 140 odd stocks. Primary reason for its higher rank is, of course, the performance. Some of its high conviction bets, which has played out well over a period of time, that has helped in maintaining the top rank ranking in this particular category.
Well, if something has stood the test of time for 4 quarters in a row at CRISIL, that too, and then therefore it merits discussion, and that's why we thought it was important to choose quant small cap. Now, if quant had maintained that ranking, what has gone up in the ranking is Tata small cap from the number 3 rank to a number 1 rank. So what is it that Tata did which was so correct, Piyush?
So for this particular fund, the one again similar to say quant, this also has a relatively more concentrated portfolio. Some of the stocks for this particular fund in service sector especially has done really well, and which has meant that its return has improved over the last quarter when we did the ranking in the previous quarter versus the latest quarter. What it also does is and again, this is a small cap category, the fund completely avoids large cap stocks and has a higher allocation to small caps. And some of those stocks have actually played out well for this particular fund, and which has meant that the fund ranking has improved.
Now, please just tell us purely, because a lot of people are going to be tuning in and listening into this conversation for the first time as well. Sure. What would the difference be between a fund which has maintained rankings for 3-4 quarters in a row versus a fund which has just climbed to the top of the rankings? Both of them are right now at par, of course. Is there a material difference between how an investor should view these rankings in conjunction of the fact that one is maintained and one is just risen to the top?
Yeah, so I think it's always important to look at the consistency. While the ranking itself looks at consistency of performance over a period of time. Uh, but if you see a fund which has come in rank one, maybe look at how its performance pans out over the next few quarters, and then maybe look at those funds. So while you look at consistency of performance, it's always good to look at consistency in terms of the rankings that come out as part of this exercise.
And there's something that Union didn't do well because that small cap fund dropped from a number 2 ranking to a number 4 ranking.
Yes. So Union is a fund which primarily dropped in its ranking because of the performance. The fund suffered in performance primarily because of some of the stocks in the chemical sector. In fact, the fund had higher exposure to this sector, almost 10% compared to 6% that the category has. This has meant that the fund lost out in terms of performance and also thereby decline in its ranking. So if you look at even the historical ranking, the fund uh, in the latest quarter is of course ranked 4. And even in the previous quarters, the fund has been ranked either 3 or 2. So to that extent, it's a fund which has never been ranked top in the CRISIL ranking.
Got it. Okay. So, well, viewers, if you follow the CRISIL rankings and how is it that they are ranking funds, and then try and listen to the argument, then you at least have a sense of which of these small cap funds are doing really well, which are the ones which may not be, and these need not necessarily be based only on returns, but a lot of other parameters as well. Piyush, you want to quickly run us through how does a fund gain in ranking versus how does a fund lose in ranking?
Yeah, so all of our rankings across categories, we look at mix of both performance and portfolio attributes. So performance is where we look at returns. We also look at volatility of those returns, which means that a fund which has delivered consistent return over a period of time, they score well in the final ranking. Apart from that, we look at portfolio construction. So factors, especially when we look at equity category, we look at factors like the extent of diversification. So if there is a portfolio which is highly concentrated, that would mean that if their few exposures don't work out, then the performance can get impacted adversely. So hence, having an adequate diversification is a important factor which is factored into our rankings. Apart from that, adequate liquidity. While equity per se is a liquid asset class, still having a adequate liquidity in the portfolio helps in the overall ranking that we publish.
Got it. Thanks for that. Now let's move categories, value or contra funds. And out there, ICICI Pru Value Discovery Fund has inched up from a number 2 ranking to a number 1 ranking. Tell us a bit about this fund.
Yeah, so this again is a fund, I would say, which is consistently top ranked, either 2 or 1 over the last 4 quarters. This is a fund which has a large cap bias. This has also helped in its performance in the recent quarter when large caps have done better than small and mid cap universe. Apart from that, some of the sectoral bets, for example, it had lower exposure to consumers, higher exposure to energy stocks. This has also contributed to its overall performance. When we look at even the portfolio-based parameters, it's a fairly diversified portfolio at a sectoral level. Fund also has slightly higher cash compared to category average. It's also to do with the fact that the fund also the asset size is significantly high. In fact, it's the largest fund in the category. That also helps the fund in maintaining more stability in terms of performance.
Okay. And similarly, the way that ICICI Pru is gained, there's another fund which has gained quite a bit, and that is the JM Value Fund from a number 4 ranking to a number 2 ranking. What went right here?
Yeah. So this, unlike iPru, which is the largest fund, this is among the smallest fund in the category, close to 150 crores. The fund performance has improved specifically in the last quarter. We have seen that in the last quarter, banking stocks, especially in the PSU space, have done well. And this is where the fund had exposure and which is where it got benefited. Apart from banking and banking stocks, metals is where fund benefited from its exposures. So some of these exposures helped in its improvement in performance, which thereby reflected in its final ranking.
Got it. Okay. So that's as far as viewers value or the contra funds go. And we shift categories now to something that a lot of you might be interested in, which is the ELSS category. Now, remember, my colleague Alex, about a few days back or a few weeks back, did a whole show on what are the tax saving funds which are best suited for you to invest into. So that might have given you some ideas, yes. I'm sure there are articles which speak about this, but it's always good to also understand from a CRISIL ranking perspective as to which are the funds which are kind of holding out, which are the funds which are not. And the two funds that we chose this time around, Piyush, are the PPFA's Tax Saver and the Franklin India Tax Shield. Now, tell us a bit about these funds, the past versus the current, and why is it that they got the rankings that they did this time?
Yeah. So both of these funds, if you look at the latest ranking, they are ranked 1 and 2. So Parag Parekh is ranked 1. This is a fund which we started ranking in the last 2 quarters. Before that, the fund was not eligible in our ranking universe. From the time the fund has been ranked, it's always been ranked as 1. If you look at its portfolio construction, it's a portfolio which is concentrated in nature. The fund sticks to its high conviction bets. They have stuck around with those bets for a fairly long period of time, and which has played out well. If you look at even its portfolio turnover ratio, it is lowest among the category. So that has helped in maintaining its higher rank in our MF ranking. Apart from that, the fund maintains higher amount of cash. It's also partly to do with the fact that it's a concentrated portfolio with where in order to maintain liquidity, they maintain relatively higher cash. Now that also helps in maintaining stability in the performance of the fund.
Most certainly. Okay. So that's
yeah.
That's nice of you to explain this, and viewers, I hope that kind of gives you some understanding around the couple of funds in the ELSS category. But mind you, it's a very wide bucket out there, number of things to choose from as well. So do your tax planning carefully. I dare say, if you haven't already, you are already late. Ideally, start your tax planning from April of next year and let it be in an SIP format, so you don't have to scramble at the last minute in order to put money into some tax saving funds, if you will. Again, depending on which, the old regime or the new regime, some of these may change as well, so be mindful of that. Do they change, Piyush? Sorry, I'm just trying to understand.
Sorry, can you repeat again?
I mean, for people in the old regime versus the new regime, I'm not sure if you're aware of that, but just wondering, does it change materially?
Yeah, so I think the benefit is there in the old regime in terms of ATC. If you move to the new regime, I think the benefit is not available with respect to ATC.
Got it. Perfect. Now, Piyush, let's move on to the two non-pure play equity categories. One of them is the conservative hybrid fund. Now, could you just tell us what kind of investor should first approach a conservative hybrid fund? And then let's try and talk about the funds within this category, starting off with the Franklin India Debt Hybrid.
Yes. So conservative hybrid, it's a category where the investments are a mix of both equity and debt, with a dominant exposure being with the debt portfolio.
Mm-hmm.
So close to 20, there's a cap of 25% for equity exposure, and remaining goes into debt. So given the hybrid nature, these are the funds which tend to give you stable returns. over a period of time. Compared to debt, the funds will are expected to generate higher return with its equity exposure. And debt, of course, provides stability to the overall return. In these funds, factors both in terms of allocation and the interest rate call, they play out in terms of their performance. And the fund which is able to generate take those calls appropriately tend to benefit in terms of the overall return.
Got it. So, frankly, in India, debt hybrid moved up from number 3 to number 2. What went right here?
Yeah. So this is a fund which has seen a gradual improvement in the ranking over the last 4 quarters. In fact, if I go back 1 year, it used to be ranked as 4. It's only then in the subsequent quarter it moved to 3, and then now in the latest quarter it is ranked 2. Fund maintains one higher allocation to equity, and this is a period when equity has done well, which has meant that its performance has remained better compared to the peer set. Fund also maintains a large cap bias, and which has in a way benefited fund especially in the latest quarter. Also on the portfolio risk factors, especially on the debt side, it's a portfolio which is dominated by government securities, which means that the credit risk in the portfolio is lower. In fact, its government security exposure is close to 48%, which is significantly higher compared to the category average. This also means that the liquidity in the debt portfolio is also superior compared to the category average.
And on the flip side, ICICI Pru regular savings has moved from 2 to 3. IDFC regular savings has moved from 4 to 5. Both of these have lost a rank each.
Yes. So I think ICICI Pru is a fund which has remained in rank 2 or rank 3 category over the last 4 quarters.
Okay.
One of the factors that has led to its decline in performance or other ranking is the weaker portfolio quality. While it scores high on return and also volatility of returns, it's the portfolio risk factors where the fund scores lower. So if I were to compare this fund vis-a-vis say iPru banking PSU, which we will be discussing, this particular fund maintains lower allocation to government securities, higher allocation to securities which are rated below AAA. So with that, the fund, of course, is able to generate superior return or higher accrual. It gets impacted in the portfolio quality parameters like credit quality or liquidity.
Okay. So, well, and then what about the IDFC regular savings fund, which is at the bottommost ranking, if you will?
Yes. So IDFC, if you look at it, again, 2 parts to it. One is the performance and second is the portfolio quality. The IDFC fund scores high on the portfolio quality parameters. And I would say it is consistent with all the debt portfolios that the IDFC manages, where we have seen largely their inclination towards having higher allocation to government securities or AAA rated papers with no exposure to lower rated papers. That also gets reflected in this particular fund also. The fund, however, loses out on performance. This is also to some extent is a result of their lower allocation to equity. In fact, the fund has close to 12% allocation to equity, while the category average is 20 odd percent, which means that superior return that the fund can generate through equity allocation is something that doesn't work out for this particular fund.
Any reason why they might be doing so? I'm just trying to think. You would have spoken to the fund house, if at all, or whatever, or you think a little bit about the strategy, or why is it that compared to the category average, they are so low on the equity allocation?
I think not sure in terms of what is the thought process of having a lower equity allocation. There's also one more observation we see is they have in fact reduced their large cap allocation also within the equity space. So both of them have actually not worked out for them in their performance in this particular fund.
Got it. Okay. Thanks, Piyush, for that. But remember, viewers, from number 4 to number 5, IDFC Regular Savings Fund. So bear that in mind. And in case of Franklin India Debt Hybrid, consistently improving rankings from 4 to 3 and from 3 to 2. I think that fund in the conservative hybrid category has done really well. Should that be a pocket that you might want to invest in? Look at these rankings. Lastly, banking and PSU funds. Uh, Again, a lot of viewers might be aware of it, but Piyush, would be lovely to understand what do these funds do and what kind of investor should invest in these before we move on to the fund names themselves.
Yeah. So banking and PSU is within a debt space. It's a thematic category, I would say, in a sense that it invests predominantly into issuers which are falling into banking or PSU space, which means that an investor who doesn't want to take credit risk in their debt portfolio, this is a segment that one can look at, given the fact that banking and PSU are supposed to be relatively safer from the credit risk perspective. The category also has restrictions in terms of exposure to these sectors. So they need to have at least 80% of their portfolio invested into banking or PSU issuers. The other factor, of course, one needs to remember is, unlike other categories in the debt space, where there is a mandated duration bucket within which the fund is required to maintain their modified duration. This is a category where there is no limit in terms of modified duration. So to that extent, the interest rate risk in the portfolio can vary across the funds within the universe. There would be some funds who may go higher in the in terms of modified duration and thereby carry a higher interest rate risk. So, from an investor perspective, that one thing that they need to keep in mind, while the credit risk is something which is controlled through these limited exposure, the interest rate risk is something that is there in these particular funds.
Point well taken. ICICI approved banking and PSU debt fund, maintaining, I believe it's ranking at number 1. Please correct me if I'm wrong.
Yes.
So what is it that they're doing right consistently?
So, in fact, if you look at this particular fund, the fund maintains rank 1 in the last 2 quarters, and before that also the fund was rank 2. So, in a way, in the last 3 quarters, it has remained in the top rank funds. Again, when we look at performance and portfolio, this is a fund where this particular fund scores high on both performance as well as portfolio risk attributes. Its return has been higher than the category average over the last 9 months, 18 months, and 27 months. Even on the portfolio risk attributes, it doesn't have any exposure to weaker sectors. There is no sectoral risk in the portfolio. Even the portfolio is fairly diversified. There are no exposures which are beyond, say, 10% or 8% in a particular rating category. The asset quality is superior with the higher exposure to government securities. Also, the exposure to the government securities is through the floating rate papers, which means that the fund is able to manage interest rate risk through these exposures. So, in and all, so the fund has superior portfolio quality along with the superior return that has helped the fund to maintain a higher rank in this category.
Okay, and on the flip side, the Kotak Banking and PSU debt fund moving from number 2 to number 3. Why is that the case?
Yeah, so when we compare this with the other funds, so while the fund maintains superior score in the performance parameter, it has higher return. It loses out on the portfolio risk attributes. It has exposure to issuers which are rated below AAA. There are some exposures which are at a issuer level which are beyond 10%, which dilutes its diversification in the portfolio. Also, the duration is something which, while it is closer to the category, it has increased in the last quarter. So, which has also adversely impacted its ranking.
Wow. So it's trying to do things, Piyush, for higher returns, presumably, but that is adversely impacting its ranking.
Yes, yes.
Got it. Got it. Piyush, this was lovely talking to you on 3 or 4 or 5 key categories, some equity, some debt on the rankings. Thank you for taking the time out and speaking to us, and we look forward to talking to you again the next quarter.
Thank you, Neeraj.
The pleasure was ours. Viewers, thanks for tuning into this leg of the Mutual Fund Show.